Hey guys, welcome to Full-Time Trader, the show where we talk about stock tips, stock news, and stocks to trade. And in this episode, I want to talk about analyst recommended stocks and how to trade them. Most stocks in the market have an analyst rating, and the analyst rating could be buy, hold, or sell. Now, most institutions and hedge funds and retail traders, when they do their due diligence, they look for the analyst rating. So it helps us predict the direction of the stock, and it's also a great way to grow an account without much experience in the market. Now, I want to remind you guys that I'm not a financial advisor, and this is not financial advice by any means. I'm just a full-time trader. That's why the name of this show is Full-Time Trader. I also suggest do not try this strategy with real money. In the beginning, what you should do is try it first on paper, be consistent. Once you're successful, once you're consistently profitable on paper, you should transfer that with real money if you decide to do that with a smaller account. Because the biggest mistake of beginner traders is to try to trade with more money than what they're comfortable with. And the thing is, it's not about having more money in your account that will make you more money. It's about having more trading knowledge. So the more you learn, the better results that you're going to have. And the way that you want to approach it is you start with paper trading. Once you're consistently profitable, try it with smaller amounts. And then once you're consistently profitable with the smaller amount, you can gradually increase the amounts of money that you want to invest in. But from a trader's perspective, every different amount of money that you're trading with, you're going to see different performances. For example, if you're good with trading with $1,000, you're going to see different performances when you trade with $10,000. It makes a lot of sense because you have different emotions when you trade with different amounts of money. So that's why first, when you try this, try it on paper, then start with smaller amounts of money and gradually increase it. Again, we're not going for home runs in here. This is not the lottery. We want to find one pattern that we can repeat and do every day in the market. And another good thing that you can do with it is follow me on Twitter and follow my Twitter alerts. I basically alert all the stocks that I buy and sell on Twitter. So if you follow my videos, you can follow my alerts on paper. And if you see that you're consistent, you can do the same thing with smaller amounts of money and then increasing it.
So the first step, go to finviz.com and go to the screener tab. Once you're in the screener tab, look for the filter of analyst recommendations. And in that filter, you should select strong buy. Now, once you're in the strong buy screener tab, you will see all the stocks that are recommended as strong buy. Now, most of the time, those stocks will be low volume because they're undiscovered and ready to take off. So to grow your account, you should own at least 10. For example, if you want to try this strategy out and you want to try it on paper trading with 1,000 imaginary dollars, so you should buy 10 different stocks and $100 per position. If you gain 10%, sell your position, and if you lose 10%, sell your position. That's the strategy. Once you're consistently profitable, you can add more and use it with real money. But if you're not consistently profitable, I suggest to take a step back and try it on paper because it's mostly about the experience. Some people think that the stock market is like a lottery, and you can just like throw money and make money out of it, like throw money at stocks and make money with it. But it's not like that. And the more experience that you gain, the better results that you're going to see. The most important thing is to track the statistics of what you're doing. So every trade that you make, you can even write it down on a notebook. What's the market cap on the stock? What was the chart pattern? And those statistics will help you in the future when you have similar situations with similar stocks. Now, the last and the most important part is improving your due diligence. Due diligence is like the most important part in day trading, investing, in swing trading, knowing what you're getting into before you get into. It's just like when you do an inspection before you buy a car or a house. So some people would just enter into stocks impulsively and won't do the right research. But once you do the right due diligence and the right research, you will filter through a lot of stocks that are not ready to take off, and you will have better results overall. So what you want to look at when you do your due diligence is first the sector. One of the things that I see from people that trade stocks without a lot of experience and knowledge is that they would trade any stock from any sector. But actually, my favorite sectors would be healthcare and technology. And the most profitable so far for me was healthcare and biotechnology. So that's also a lot of the stocks that I would hold and basically investing for swing trading, and a lot of the stocks that I talk about on my Twitter account. Another important factor for due diligence is the market cap. So most of the times, stocks with lower market caps would have more growth opportunity, while stocks with larger cap have lower growth opportunity. So my favorite so far, and I already talked about it, is micro caps. Nano caps are also good, under 50 million, as long as the company is legit. Now, another factor would be price target. A higher price target could mean institutions, retail traders would be bullish about the stock just because of the price target. So I always look for stocks with a price target of like 50% or above the current price. Overall company research. So that's I'm not talking about like general DD. I'm talking about the company itself. So go to their website, Instagram, LinkedIn. Basically, look for any type of information that you can about that stock, because a lot of the stocks in the stock market that are failing, they're failing because they have a bad business model. And a lot of the times, people could invest in stocks like that just because they saw it in a video, or they don't really understand. So the overall company research is very, very important. Basically, knowing that you can agree that the business model could lead to growth for that company and for that stock. So the last thing that you want to check is the chart pattern. Now, because this is more swing trading and active investing rather than day trading, the chart pattern would be the last thing that I would look at. And the reason is because once analysts recommend that a stock is a strong buy or better, that basically means that the chart could suggest almost anything. Sometimes a stock could really sell off and then become a strong buy by analysts, because the analyst suggests that now it's the dip and now it's the best time to buy before the takeoff. But the most growth that I've seen so far was with stocks that are currently on an uptrend. And you also have a filter for it in the Finviz screener. So you can use that as an advantage when you try to grow your account. And the results that you're going to see on paper and with a real account are very nice. Some of the times it could be results that are better than what some institutions do in a year. So that's pretty nice. But what you need to focus on is basically making sure that you're getting the right companies with a lot of growth potential, the right business models, and that's something that you will improve with your trading experience. But it's also a strategy to grow your account without much experience, because once the analysts recommend that the stock is a strong buy, it has a high potential of growing in price. So it's really hard to go wrong with this strategy. It also depends on where the market is going. So, for example, if the market is more bullish, you will have better results. If the market is more bearish, you will have worse results. But in the end, it's all about your experience. There are good companies that grow even in the worst market conditions. And this is something that you can determine with better trading experience. So I suggest, just like I said, learn more about the market and learn the statistics of the market. Write down every day that you trade what happened and how you can improve for the next day. And remember, there's no such thing as losses in the stock market. There's only lessons, okay? So what you want to do is basically learn from your mistakes and grow. And that's why I always suggest to start on paper, give it time, and then do it with real money. And I want to thank you guys for all your support on the channel. I've been getting a lot of views lately, so thank you guys so much. If you like this video, please leave a thumbs up. You can also leave in the comments below what you want me to make a video next. And until the next one, guys, peace out.